Dear investor, welcome to yet another edition of Sharekhan Yearly Diwali Picks, 𝗙𝗏 2079. I am Sanjeev Hota, Head of Research at Sharekhan by BNP Paribas. As we step into 𝗙𝗏 2079, what better time to look back at the year that was? 𝗙𝗏 2078 was not all kind to the investor. Geopolitical tension, raging inflation, rate hikes by central banks globally, liquidity tightening, supply chain disruption, all these factors formed a heady cocktail that made the previous 𝗙𝗏 the most volatile on the record. Despite all these headwinds, our Diwali picks basket managed to convincingly outperform the broader market indices, and in fact, 6 times in the past 7 years, our Diwali picks has been outperforming the Nifty, which is quite a remarkable feat. Our last year Diwali picks clocked a 3.6% return, while the Nifty slumped 6.5%. The CNX Midcap index lost 2.3% during the same period. What lies ahead? Stepping into 𝗙𝗏 2079, there is certainly the potential for more volatility in near term. The near term, as market would continue to wage on the global macro uncertainties. Nevertheless, Indian equities offer an attractive opportunity for investors on the back of growing conviction on multi-year economic upcycle in India. Further, from a valuation perspective, Nifty valuation at 17 times forward earning offers favorable risk reward for long-term investment. Thus, we believe Indian equities remain an attractive proposition for investor. Now let's see some of the reasons that gave us comfort on the India growth story in the coming years. First, India remains the most resilient and stable economy in a very turbulent and volatile market condition. Secondly, India macro position is more solid, coupled with improved corporate balance sheet, which ensures leading GDP growth among the world economy and healthy corporate earnings outlook. We believe, despite external challenges, Nifty earning would clock a decent 15% CAGR over 22 to FY24 earnings, while the BSE 200 would likewise chart a much better growth with 20% plus earning growth in the same period. Third, India growth fundamentals have definitely improved from the pandemic level. Domestic demand drivers are in place with household debt is low versus per capita income. Further, with per capita income crossed the inflection point of $2,000, provide a huge room for growth in this decade, which will drive the domestic aspirational consumption. As I said earlier, India is set for a multi-year economic upcycle with pro-growth government policies, which in turn have multiplier effect on the overall economy growth and job creation. Coming to this year Diwali picks, from the BFIC space, we have ICICI Bank, Bajaj Finance, and Bank of Baroda. From domestic mass consumption and aspirational consumption space, we have picked Titan, ITC, and Devyani International. From infrastructure and capex cycle space, we have picked Larsen & Toubro, Hindustan Aeronautics, Kirloskar Oil Engine, APL Apollo. From auto space, we have Eicher Motor, Grips Cotton, and Mahindra CIE. We have also included 2 companies from the export theme perspective owing to reasonable valuation at current level, and that companies are Sun Pharma and Coforge Limited. We remain highly constructive on equity as an asset class and more so on India growth story. We advise investors to use the market volatility to construct a quality portfolio for long-term wealth creation. From the entire Sharekhan family, wish you a very happy Diwali and a prosperous new year. इस दिवाली मार्केट में इन्वेस्ट कर शेरखान कर.
Thank you for watching. To keep up with the latest from Sharekhan, make sure you subscribe to our channel. You can also download the Sharekhan app for all your trading and investment needs. Investment in securities market are subject to market risks. Read all the related documents carefully before investing.